Hey guys, welcome everyone to another live stream with Binomo Live. I'm Ahmed, joining you today discussing about smart savings tips to grow your account. So, the income that you make from your day job, the income that you from your salary, that's active income. Now, you can rely on active income to be able to take some money and put it into your trading account. In your 20s, you can do that. In your 30s, you can do that. In your 40s, maybe not for very long. And then in your 50s, you are not going to rely so much on your active income, because by that time you are probably wanting to relax and not spending time working. So active income is the kind of income where you have to spend time working, like a 9 to 5 job, like a permanent job. Now, you want to be able to build, besides your active income, you want to build this multiple sources of income, okay? Your second, third, and fourth sources of income. And you want these sources of income to be different. And we call this passive income, or you can call it less active income, okay? Now, the way you need to be able to afford to trade, the way you need to be able to put some money aside for trading, is to be able to live a life that where you don't spend all your active income on things. Okay, if you're getting $2,000, or if you're getting $1,000 from your active income, from your day job, from your employment, you don't want to be spending all of it on expenses. You don't want to be buying things with all of that money every month. Okay, you need to put aside some money for savings. You need to put aside some money for trading. So at the very basic, for you to be able to afford to trade, is to have your salary or active income, and then splitting it basically into 3 different categories. Number one, paying all your bills. Okay, that is your expenses. Whatever you need to pay, food, rent, housing, whatever you need to pay, all your bills need to be settled. So every month you pay your debt, you pay your loans, you pay your food, you pay your drinks, maybe you have some time to enjoy doing the things you like. So some of it goes into expenses. Now you want to be able to have to allocate the balance of that. Okay, so from your active income, you're getting salary, you're paying expenses, so you're going to have a balance if you don't spend everything. Now that balance you need to split into 2. You need to split into savings, and you need to split it into your trading account. Now at the beginning, when you don't have a lot of experience in the market, you don't want to be splitting half and half. You don't want to be splitting 50-50. Hi, Mr. Janin. Thank you for joining us. Hi, Kendon. Hi. I see you guys joining us on the live chat. Let us know where you're joining us from. Which city are you in? And how many years of trading experience do you have? Now, when you're young and you're just starting out trading, especially when you are in your 20s, you probably want to split that in a very cautious way. Okay, so for example, if you have $2,000 from your salary, pay all your expenses, and then the remaining balance that you have, split it using a percentage of 80-20 or even 90-10. So from that balance, after paying your expenses, maybe 90% goes into your savings account. So this is money that you will not touch. It's your savings. It's something that is going to help you when you have a tough time, or when you need to pay for something in the longer term. Maybe a new car, maybe a new house, maybe to pay for your education, for the education, whatever it is. So 90% needs to go into savings when you are inexperienced, when you don't have enough experience. Now 10% goes into your trading account. So this way, you're not going to lose a lot of money if you are not successful at the beginning. This is where you learn with the 10% from the balance of your active income after paying for expenses. Now, if you start to get better and start to get more comfortable with trading and you are making progress, then maybe after 6 months' time, the salary after paying expenses, that balance, you can split it using 80-20 or 70-30. So 70% or 80% goes into your savings account and do not touch that cash. So the remaining balance of that 20% or 30% you can channel or put into your trading account. Now remember, this is the time when you have made progress and you start to gain confidence with your trading, with your technique, with your strategy, and you are starting to see some success. So then you can increase a little bit of your allocation from 10% to 20 or 30% going into your trading account. Now, you can apply this in your 20s. And if you become even more successful and are making even more progress, then what you can do is probably go even to 60-40 or 50-50. So getting your salary, pay off all your expenses, pay off all your loans, and then from that balance, 50% goes into savings and 50% goes into trading. Now, you can do this for as long as you are making progress with your trading. If you are not making progress with your trading, then don't increase the trading allocation. So whatever balance you have after paying for expenses, bring 90% or bring 80% to your savings account, allocate to your savings account. This is not trading, this is just cash in the bank for you. Okay? The balance 10 or 20% goes into your trading account. If you don't make progress, do not increase the allocation for trading. Keep it at 10 or 20%. If you make progress, then you can increase the allocation and bring it up all the way to 30, 40 or 50%. Up to you, depending on your risk appetite. You can probably do this whilst you are in your 20s and probably into your early 30s. Now, once you get into late 30s or once you get into your 40s, I do not recommend you allocate more than 30%. So whatever you are getting from your active income, from your employment, from your salary, that salary pays off all your expenses, rent, food, everything else. And then from the balance, you allocate a maximum, it cannot go higher than this. 60% goes into savings and 40% goes into trading. Do not exceed this limit. Okay, 40% is the max. Now, if you go into your 50s or maybe early 40s, then bring it down even further. So 70% goes into your savings account and only 30% maximum can go to your trading account. So this way, it's a very safe way for you to enjoy trading, have some funds for your trading, have money for your trading without risking and destroying your financial health. Okay, your financial health is really important. You don't want to put everything you have from your active income into trading, and you definitely do not want to take new loans to trade, because that will cause disaster to happen. You're going to have panic attacks, you're going to have headaches, you're going to get yourself into hospital for stress if you lose all your money. So be sensible. You have active income, pay off for your expenses, and then put the rest into savings and trading. So the savings is something that you can turn into passive income. So if your savings are, you're able to put into large index ETFs, into some investments that pays off dividends, then index ETFs are safer than individual stocks. So they tend to rise over time, over the long run. So the value will increase, but slowly over time. And you will also get the benefit of dividends if you invest in ETFs that pay dividends. And this is something that is going to grow your cash balance without you doing anything, which is why we call it passive income. So your savings can be invested for the long term and invest in safe investments like large index, low cost index funds or ETFs. And the balance you have that goes into your trading account, you can be more adventurous with this. Because why do I say it's adventurous? Because the purpose is to build trading skills. The reason we fund our trading account is so that we can create income from the trading capital. Now, if you are able to learn and grow your trading skills, your trading account balance is going to grow. Now, this is not passive income strictly, because you do have to work, you do have to learn, you do have to make mistakes, and you do have to really work hard and be disciplined about learning about assets, learning about economy, and finding ways to turn whatever your capital is into a bigger amount. You need to find ways to make profitable trades. Now, this is taking time. So, in a way, it is active income. But once you are good, it becomes semi active. Why do I say that? Because once you are good, once you are able to generate profits consistently, then you won't be spending 9 to 5 like you do in an office to make money. You probably spend half an hour in the morning in the Asian session, maybe half an hour in the London session, maybe half an hour in the New York session, and then make some trades, 1 or 2 or 3 trades here and there throughout the day. And from there, you might be able to make even more money than whatever you make spending 2 hours in the office. So in that sense, once you are good, you turn your trading capital, your trading balance or trading account into a semi active income. Okay, so it's not full active income. You don't have to work 9 to 5. You only spend a couple of hours a day, or maybe a couple of half hours a day, 30 minutes a day here and there, to be able to analyze assets and then make trades, and then you get profits from it, and then keep it growing over time, making sure that you don't make silly mistakes. Okay, so that's passive and semi active income. And of course, you need to know that the allocation is the most important thing. As you move from your 20s, when you are 20-year-old and in your 20s, you can allocate a higher amount to your trading account, provided that you make progress with your trading skills. And then as you go to your 30s, you allocate less to your trading account, because you don't want to over risk as you get older. Okay, and the idea is to become better at trading, not taking more money from your savings and putting it into your trading account. That's doing it the wrong way. Okay, grow your skills is more important than how much money you allocate to your trading account. And then as you go into your 40s and 50s, hopefully you've gotten good enough at trading that you really don't have to allocate so much into your trading account, because whatever you allocate in there, you will be able to grow it from your trading skills. Okay, now one quick tip that you can use to increase your savings from your trading account is to take quick profits. Okay, so whenever you see a profit, let's say you target a certain move in the market that's going to give you I don't know, $20 a day. If you target to make $50 a day and you've already made $30 without too much trouble by the London session, you can take quick profits. And by that, I mean stop trading. Don't make more trades to make the $50 target. If $30 came, was so easy to get for you for that day, be happy with it. Just wrap up and close for the day. Be happy with the $30 and then keep it. If you trade, you might lose it, so keep it. Take early profits. Take profits early. This way, you sort of cheat the system and you prevent yourself from making losses, and then come back and trade the next day. Okay, and then start small. Always start small so that you don't lose the whole amount. So if you've made $30 profit on Monday, don't come on Tuesday and your first trade is a $30 trade. Then you will lose everything if it was the wrong trade. So open smaller trades. Open $2 trades or $5 trades, and then start to get some wins. If you don't get to make some wins, or don't get to make any wins at all, then stop trading. Then you protect your $30. Maybe you make a $5 or $10 mistakes and you find it to be difficult on Tuesday, then stop trading. So your $30 goes down to $20. Your $30 profit on Monday goes down to $20 because of the $10 loss on Tuesday. That's fine, but you stop so that you protect your account, and then come back on Wednesday and do it like that. So take profits early and be cautious about taking new positions, new trades on the next day. Definitely don't open large trades because that is the fastest way to destroy your trading balance and your trading emotion. Okay, so that's the tip I have for you. Some smart saving tips to grow your account, allocate properly, and then take profits early in your trading account. So now let's go to the markets and find out trading opportunities if we can for today. I'm seeing here Candon is saying Mr. Jane, and Miss Jane is asking, can you give us a trade? And Candon is saying tips, explain. So okay, so I'm going to look at the markets right now and see if there are any interesting trades that we can make. On the platform, I have Euro USD. Really, without over analyzing this, the asset is going down. Look at that. The asset is going down. It tried to go up. It came down. Oh, it's got that push right there. Push down, push down, push down, and tried to recover. Didn't go very far. Push down again. Tried to recover once. Okay, tried to recover once. Not quite successful. Tried to recover a second time. A little bit success, but then it failed. And on the third time, this is the third time, looks like it's failing. So the asset is really going down. So I'm going to open a down trade without too much thinking. So this is, let's open a 4 minutes trade with $10. And here we go. So I've opened a down trade on Euro USD with 80% profit factor and about 4 minutes trade duration. Okay, now ideally I would go to my 5 minutes, but to me it's pretty obvious that what we are seeing is the asset pushed up, really failed to go any higher and struggling to go up. So my analysis is telling me that the asset is going down. How soon or how long it will stay in the downward trend, we will see. We will have to see. So I'm opening my first trade with Euro USD, taking into account that the asset has failed to go up and go past, overcome this resistance at 107.5. Okay, so 107.5 is the resistance. The resistance is respected. Okay, so the asset cannot go higher, so the downtrend should continue, and it may not continue for very far because remember there is a support right here. So I'm hoping just in the next 4 minutes is going to stay in the downward trend, and that would be enough for us to make some profits from the market. But the asset is probably not going to stay down forever. It's just the next 5 or 10 minutes. I'm thinking the asset is going to go down. Okay, so that's Euro USD. We'll let the trade play out. So 1 minute to go. Let's look at AUD USD in the meantime, because it's a similar asset. It's a currency against the US dollar, and I'm going to go to the 30 minutes, start with the 30 minutes time frame. And really I'm seeing the same thing. Look, I'm seeing the same thing. The asset is going down. It's weakening. Tried to go up, failed. Tried to go up, failed. So let's look at 5 minutes. And yeah, it's trying to push up. It's trying to push up. Well, it's good if it's pushing up, because in a downtrend we want to open at a higher price. So I will probably take this opportunity to open my down trade right here with a 4 minutes or 5 minutes time frame. Okay, and opening a down trade on AUD USD. What's happening to the Euro USD trade? 4 seconds, we've lost that. Did we get it? I don't think so. Oh, okay. It's break even. Okay, so it's break even. We did make a profit, but we also did not lose money on that trade because it exit at the same price as the entry. So that was Euro USD. Now we're waiting for AUD USD right here. We've opened a trade and 2 minutes left. The asset is showing pullback on the downtrend. Ratnadip, I'm from Malaysia. Where are you from? Similar time zone, I guess, is where we are. 3 hours away from Delhi. So we're waiting on AUD USD. 1 minute to go. No, the downtrend is there, but it's giving me a pullback right now, so it may come back or stay in pullback mode. So if it stays in pullback mode, I'm not going to be able to make any profit from this trade. Saddam Rashid, the best time to trade is during the New York session, which is right now. Why? Because the volume is the highest and you get real prices on the market. You don't get inefficiency, and all the best trends are happening in the New York session. So 40 seconds to go on AUD USD. Now we broke even on Euro USD, probably not making profit on AUD USD because it's still in pullback mode. Unfortunate as that is. I'll probably open another 5 minute trade with this. 20 seconds to go. Yeah, if it's in pullback mode, that's just how it is. A traders, why not trading in real account? Well, trading in real account, I'd have to do a separate live stream for that, because when we're trading real account, the psychology is different, and I have to show you my trading plan, and can't do that in the short live stream that we are doing right now. But maybe it's something that we can do in the future. Okay, so our trade for AUD USD closed, and we were lucky. We got a profit from that trade because the pullback reversed sharply down during the exit. So we were able to get break even on the first trade and profit on the second trade. Okay, so that's 2 trades for today. Now, what do you think is going to happen? What do you think is going to happen to AUD USD in the next 5 minutes? Or what do you think is going to happen to Euro USD in the next 5 minutes? I'm wondering what you think is going to happen. Put it down in the comments. Do you think it's going to go up? Do you think it's going to go down? What should the next 5 minute trade be? Up or down? Let me know in the chat. Let me know in the comments. What do you think? Yep. So 5 minutes, 4 minutes. What do you think is going to happen? AUD USD and Euro USD. Is it going to go up? Is it going to go down? 5 minutes. in the next 5 minutes? I'd say AUD USD will probably continue to go down. AUD Euro USD is struggling. It's in sideways trading right now, but I think there's every chance that it's going to go down. Pushing higher. AUD USD is pushing higher, and yeah, let's push the duration a little bit. AUD USD pushing higher. I don't think it's gonna go all the way to the resistance level. Euro USD as well, currently bouncing off of some support there. Now the question is the downtrend going to continue? Because if it is going to continue, then that's an easy trade that we can make on the downside. So, but right now it's pulling back. It's pulling back. It's going up. Wait and see for some red candles before making this trade, making the next trade. Let's see. Do you think it's going to go up? So I've made two trades today. One break even and one with profits. And right now I'm watching the pullback on both Euro USD and AUD USD. Just waiting to see if it's going to totally change direction and go up, or if it's gonna come back down and resume or continue, show continuation of the downtrend. Interesting. It's pushing up. Oh, we don't have to rush. Never rush. Look for the setup that you want and trade that setup. Okay, you gotta have a plan, and you gotta trade your plan. Have the discipline to trade your plan. Well, right now I'm just using support and resistance. Saddam Rashid is asking, do I use any strategy? I'm using support and resistance. I'm using multiple time frames. I'm using 30 minutes, I'm using 5 minutes, and I'm using support and resistance levels. And of course I'm using trend lines, because when I'm looking at the chart from a 30 minutes time frame, I'm looking at where the asset is going. So from higher price to lower price, imagine that's a line right there. So that's a downtrend, and this is a higher price, this is a lower price. That downtrend continues. So that's a downtrend right there. You can draw the line if you want. I haven't been drawing the line because it's pretty obvious. The downtrend is what's happening right now. Yeah, this is the interesting situation with this asset. After coming down so much, now it's starting to pull back up and probably destroy all the traders who are trying to make profits on the downtrend. But if you see this happening and you're not sure when it's going to exit the pullback, what you can do is extend your duration, make it slightly longer, make it a 10-minute or 15 minutes duration, then open a trade on the major trend. So the major trend is downtrend, and with the longer duration you will be able to overcome the pullback. Okay, the pullback will end at some point, unless this is not a pullback. Okay, so you got to make one trade. If you don't want to wait for the pullback to end, then you put a slightly longer duration. Okay, you got to put one trade in to be sure. Then if you lose money on this trade, that means the trend has changed direction. It's now turning into an uptrend, which is fine because you're only losing one trade, and then you can open the next trade to be an up trade. Now, if the pullback is going to end, then it continues to be a down trade, then your next trade is going to be a winning trade. Okay, so that's how I would approach this. So I guess those are the two trades I'm going to make today. This is quite interesting. I'll probably be continuing to watch AUD USD and Euro USD this evening, and I hope you do as well. So I hope that has been has been of benefit to you guys. Feel free to give a thumbs up, like the video if you enjoy it, and put down the comments any feedback you have, and share the video, share the link to the video with your trader friends, and hopefully we'll see you next time. Enjoy trading. I'll see you in the next live stream. Take care. Bye bye.